Hello, traders, and welcome in a new weekly live analysis session hosted by the market research team at OnePro. This is Muhammad Yaoud, and I'm the global head of market research. And today, as usual, we're going to have a look on the weekly updates and analysis. What do we expect during the next week? What are the main risk events that we will be having in the markets on our economic agenda? And of course, we will be discussing the market on the technical side. What are the charts telling us? What does the technical analysis show us during this week? So let's have a quick look on the markets, and let's start with the economic agenda for this week. Starting with the economic agenda, basically we do have somehow a light economic agenda for this week. So not many important economic figures are waiting. We are waiting for. Basically, we only have a couple of them. And starting with today, Monday, the 7th of November, basically we have nothing except a speech scheduled today from the ECB President, Christine Lagarde. She's due to speak in a pre-recorded video at a conference hosted by the European Commission. Basically, the ECB is highly awaited during this period. Comments from the ECB about what should be the monetary policy during the next period, especially that the economic numbers and figures from the ECB is very volatile at the moment. Will we see more monetary tightening by the ECB or not? This is basically what we'll be looking for during any speeches by the ECB members. Starting tomorrow, Tuesday, basically, and the two most important days during this week should be Tuesday, tomorrow, as well as Thursday, the 10th of November. Basically, tomorrow, we will be having a couple of speeches from the FOMC members, especially Mester. And during the next, let's say, 1 month, we will be highly looking for comments from the FOMC members, especially after the last Federal Reserve meeting or the FOMC meeting, where we had no enough clue about what the upcoming monetary policy will be. We will be having more monetary tightening. Will the next meeting show us another rate hike of 75 basis points or only 50 basis points? So a lot of questions were left unanswered during the last meeting, and that's why we will be highly looking for any comments by the FOMC and the Federal Reserve members, know basically how things will go. And basically, when we check the charts, we will see how much the dollar is having some sort of an indecision during the trading. Traders are divided between longs and shorts. We will be having a look on this. However, in the time being, we should be having a close eye on the comments from the FOMC members to know how things will be going. However, the key thing to watch during today and tomorrow would basically be the congressional elections. This is the elections basically in the Congress, the US Congress, between the Democratic and the Republican Party. At the moment, the Democrats have both branches of the Congress, which is the House as well as the Senate. However, during the past period and during the presidency term for US President Joe Biden, he's being so much criticized, and the Democrats are being criticized for the high inflation in the country. So basically, surveys show so far that the Democrats might still be able to win the Senate. However, they might lose the House for the Republicans. It's really tight. The surveys show that both parties have a 50% win of chance. So we will be having a look closely on the elections. Basically, that this elections, if the other way around happened and the Republicans were able to win the House, we might see some indecision in the US presidency going forward for the next 2 years for Joe Biden, because basically not all legislation and laws will be easy to pass from the Congress as long as the Republicans will be in the House. So we will be having those congressional elections. The results should be announced tomorrow. However, we do highly expect the decision or the results will be announced way before the formal announcement from the initial vote counts and exit polling. So this is something highly important to watch. And on Wednesday, basically, we have nothing on the economic agenda. And Thursday is another very, very important day because we do have the US CPI numbers. It's the CPI, or the Consumer Price Index, the main measure and gauge for inflation in the US markets. Basically, the CPI on a year over year basis, which is the key thing to watch, is expected to ease down a little bit from 8.2% to 8.0%. However, markets will not only be looking for the CPI, however, will also be looking on the core CPI, which excludes the volatile items such as food and drinks. So we want to know basically whether inflation is cooling down a little bit or not, because the Federal Reserve and the FOMC committee basically looks closely on two types of data. First of all is the employment data, the labor market, and the second is the inflation measures in the country. So this is very important to watch on Thursday. And to me, basically, this is the key risk event, which should add more volatility in the markets during this week. On Thursday, also, we will be having a couple of speeches from FOMC members, Waller, Mester, and George. And as we agreed, we will be highly looking for any comments from the FOMC members. We end the week on Friday, the 11th, with nothing much to watch for except for the GDP from the British economy. The British economy is expected to have a recession by the end maybe of this year, or at most the beginning of the next year, 2023. So we will be highly looking for this as this directly affects the trading on the British pound. This is basically a quick summary of what we expect during this week, and nothing much except for the CPI from the US on Thursday, as well as the elections between the Democrats and the Republicans expected to be announced tomorrow on Tuesday, the 8th of November. So let's have a quick look on the technical analysis and the charts. And please be sure that if you have any questions or any analysis that you would like us to have a look on, please leave it in the comments, and we will make sure that we will be answering this real quick on the spot. So let's have a quick look on the analysis and the charts. Okay, starting with the US dollar index, what's happening on the US dollar index at the moment? We mentioned during the past week that the dollar index is slightly moving to the downwards. However, this downward move, or this correction to the downside, it's a weak move to the downside. So there is no enough pressure to the downside to say that this should be the top formed on the US dollar index, especially after the Federal Reserve and Jerome Powell mentioned during the last week that we might see higher inflation levels for longer periods of time. And after mentioning that the terminal rate for the interest rates 4.6%, we basically might go beyond this level. So markets are at the moment pricing in more rate hikes. Some are basically pricing in 75 basis points during the next meeting. So as long as this indecision is present in the markets, I really don't believe that this move should be the top to be formed on the US dollar index. And I do personally believe that we might still have another upward move, another last upward move on the US dollar index. However, in order to catch the dollar index in a long position and add to our long exposure on the US dollar index, we must wait for the index around a support level. So currently we are trading in not so perfect price channel to the downside. However, I do believe that the support that we mentioned during last week still exists, which is the one around the levels of 108 points. So we will be waiting basically for the US dollar index to continue the move downwards. And during the week, as whenever we reach the levels 108, which isn't so far away and could happen basically during the US CPI numbers, we will be adding to our long positions on the US dollar index from here around the levels of 108 points. So as long as the indecision is present by the Federal Reserve, we or some people do expect another rate hike, aggressive rate hike to take place in the next meeting, as well as the meetings in the first quarter of the year 2023. So do we expect another move to the upside on the dollar index? Yes, we do. However, we must wait for some bullish price action to take place here around the 108 points in order to add to our long positions. That's for the dollar index. So we do expect a move lower, and off we go from here, the levels of 108 points. The other way around on the euro versus the US dollar, and basically the euro is currently trading in an abnormal price action, because basically we mentioned during the last week that we have this downward trend line, which was extended or began basically at February 2022. We broke above higher. This turned out basically to be a false breakout, or not basically a false breakout, but we can say it was a premature breakout. And a premature breakout is an early breakout by price action in the direction of which the price eventually will break out. So I still do personally believe that we will break out to the upside to target the levels of 1.0977, or let's say 1.02. This is basically where we would be looking for. So another higher move on the euro versus the US dollar is expected before we can add to our medium and long-term short positions on the euro to target more movements to the downside. And when this happens, basically a move upwards of around 250 pips, it will still be a correction phase. This whole part will be a correction phase, and this break above the downward trend line should be a false breakout. So this is basically the best scenario to trade the euro. We will be looking for long positions on the short time frame. Yeah, here on the euro, we can see a strong upward move. Basically, the week started with a downward gap on the euro because we had an upward gap on the dollar. We will be waiting for this gap to end. We might expect a correction here on the short time frame. So when this gap basically fills, we might expect a downward move, after which we can add to our very short term positions on the euro and target this upward move on the medium term. So this is basically how we could trade the euro versus the US dollar on the 30 minutes time frame, all in line with the higher time frame, which is the 4-hour, as well as the daily time frame. The pound is basically a little bit more clear on the daily time frame, because we're still basically trading below the downward major trend line, basically, which started also as well at February of this year. So we are still trading to the downside. This upward correction is a perfect example of a rising wedge. It seems to me that this is starting to break to the downside. We will be waiting for price action on the pound here around those levels, basically, because an upward break is something that we would be looking to buy. However, the more or the better scenario is to wait for a break below this low, which is 1.1157. As soon as we see a confirmed break below this one, we would be adding to our short positions on the pound versus the US dollar on the short and medium term. Our first target should be on the daily time frame, of course, 1.0356, and we would be highly looking to trade this downward move. On the 4-hour time frame, this is the wedge that we have seen on the daily time frame. Yeah, maybe you can copy and paste it. It would be much easier. Yeah, this is the wedge basically that we would be looking for. Yes, it seems here that the pound has broken below the lower limit of the upward rising wedge, and we'll be looking to short this move to the downside. Having a look on the gold trading, currently around 1670. And basically, gold was one of the best technical setups that we had during the last week. We mentioned that we have this support level of 1620, and we were waiting basically for bullish price action to show around those levels. We had this bullish price action here, and again we had this bullish price action here. Then we had this brilliant daily candlestick for Friday the 4th of November, and we reached our first target of around 1682. Basically, gold trading is really interesting at the moment because we are trading around the level of a make or break. What is a make or break? This is this level of 1682. If gold prices basically were able to break and hold the trading above 1682, this will be a break of the upper limit of the downward price channel, as well as a break of this high resistance of 1682, which is basically something we have been struggling a little bit to break above. 1682 here and 1682 here. A break above this level, two key or cluster resistances should have been broken, and we will continue the move to the upside. However, the other scenario is, which I go with, is what's basically happening at the moment here. Some bearish price action to show because we are having this support and this resistance level. So we expect a pullback on the gold trading back to the levels of support 1623 during this week and on the daily time frame. The 4-hour time frame, basically, we can see how well prices topped around the levels of equilibrium that we mentioned before during the last week. So we had our support 1650, 1625. We had bullish price action. We mentioned two targets, levels of equilibrium 1682, and then the levels of resistance 1731. We reached our levels of equilibrium right here, which was our first target. We will be canceling the second target, 1731. I don't really believe the gold will be able to target because, yeah, this is the downward trend we are looking for. Yeah, this is roughly the downward move. So this is a make or break level. I do believe we will be back to the levels of 1625 one more time. And that's for the gold trading. Having a look on the US crude oil, basically it has been trading very slowly during the past couple of days. We are still going upwards to target the levels of resistance just around the levels of 95.34. So this is the resistance that we mentioned weeks ago. We are currently about to target those levels. So on the 30 minutes time frame, what you can do is, because we still have a target to the upside, which is the resistance before moving down. Also, the US crude oil started the week with a downward gap. We will be looking for entry positions on the 30 minutes time frame to target the filling of the gap, which is around 92.44, and then the levels of resistance that we mentioned here, 95.34, an upward move before we can look for bearish price action here and target more possible move to the downside. So this is basically what we are looking for. During this week, you can trade this upward move to the 95.34 by looking for long positions on the short time frame, I mean the 30 minutes and 1 hour. We end this live session with the US Dow Jones. Basically, on the 30 minutes time frame, we can see how bearish this looks like. So we had a series of ups, highs, and lows. What happened here was basically a break to a swing low, which basically reverses the trend. So starting from here, we had a new lower low. Prices retraced a little bit. However, we also failed to reach a new high. So from here, we can see we had a new lower high and a new lower low. That's the lower high and that's the lower low. it basically starts a new downward trend on the Dow Jones. Basically, this was something we were looking on the daily time frame. We mentioned that we are looking for the resistance around 33,400. We fell short a little bit below this target. However, it seems that the Dow Jones is looking for more bearish move to the downside from here after the Federal Reserve comments that we might see more hawkish moves and more aggressive rate hikes in the near future. I mean, the next meeting and the following ones. So the Dow Jones is bearish. The 30 minutes time frame looks bearish, and you can basically use this resistance level as areas of where you can go short on the short and medium term. However, during this week, basically you have two phases, the phase of Monday and Tuesday before the CPI numbers, which is to be announced on Thursday. So please make sure that if you're trading on the US dollar, if you're trading on even dollar pairs, I mean the major pairs, euro, pound, as well as gold and the Dow Jones, please make sure that you keep your risk to the minimum, because any surprises in the CPI numbers should affect comments from the FOMC members, and we will be having some high volatility in the markets during this week. So if you're trading the dollar pairs during this week, please make sure to keep your risk at minimum, just to make sure that not a single loss will wipe up your account. Please stick to your risk management tools. It's all technicals at the end of the day. However, risk management is what can make you money. Make sure to stick to your stop loss and to your predefined target, and also watch your lot size. So that was all for this week's weekly live analysis session. Thank you so much, and please make sure if you have any questions, you can send them to our Facebook page or social media on Twitter, LinkedIn, as well as Instagram. I'll be happy to watch all of your comments and give you a detailed of analysis of your comments and requests whenever available. Thank you so much for watching this, and we will meet again on a daily basis in the Daily Markets Outlook video, which is a pre-recorded video published daily on our social media, just to discuss markets and to discuss what are the updates. So today was a weekly live analysis session. Going forward, Tuesday, Wednesday, Thursday, and Friday, we will be having this pre-recorded video, just a quick update of a couple of minutes to make sure that you're following up with our analysis, and just to provide you with more and more updates and outlooks on the markets. Thank you so much for watching. We'll meet again soon, and please stay safe.